Hello everyone. Welcome back to another interesting video. Let's break down something that's often talked about but not always fully understood. Leverage trading in the world of crypto. If you've heard the term leverage and wondered what it really means or how it works, you're in the right place. Today we're going to walk through what leverage trading is, how it can amplify both gains and losses, and why it's not something you want to dive into without a clear game plan. So grab a coffee, settle in, and let's get into it. So what exactly is leverage trading? Think of it this way. When you trade without leverage, you're using only the money you already have in your account. It's straightforward. If you've got $1,000, that's what you trade with. But when you use leverage, you're essentially borrowing additional funds to increase the size of your position. For example, if you have $1,000 and apply 10 times leverage, you're now trading as if you have $10,000. That means your potential profits are much larger than they would be with just your original amount. But, and this is a big but, the same goes for your losses. If the trade moves against you, your losses can add up much faster than you might expect. Leverage is usually expressed as a multiple, 2x, 5x, 10x, or even more. The number tells you how many times larger your position will be compared to the funds you're putting up yourself. So 2x leverage means you're doubling your exposure, while 10x leverage means you're trading with 10 times your initial capital. Sounds exciting, right? But it's also a double-edged sword. While it can help you magnify your returns, it can just as easily wipe out your account if things don't go as planned. Let's walk through a simple example to make this clear. Suppose you have $1,000 in your trading account and you decide to use 5 times leverage. This means you're now controlling a $5,000 position. If the price of the asset you're trading goes up by 10%, your $5,000 position is now worth $5,500. That's a $500 gain. Without leverage, you would have only made $100 on that same 10% move. So you can see why traders are drawn to leverage. It makes smaller market moves much more significant. But now let's flip that scenario. What if the price goes down by 10% instead? Your $5,000 position drops to $4,500, and you've just lost $500. Half of your original $1,000 capital. Without leverage, that same 10% drop would have only cost you $100. So while leverage increases your potential rewards, it also multiplies your risk. And that's why it's so important to approach leverage trading carefully. One of the most important concepts to understand is margin. Margin is the amount of money you need to maintain in your account to keep your leverage position open. If your trade moves against you and your account balance falls below the required margin level, you may receive a margin call. Or worse, your position could be automatically closed by the platform. This is how leverage trading can lead to losses that happen very quickly if you're not careful. Now, why do people use leverage if it's so risky? For many traders, it's about maximizing efficiency. They believe they have a strong strategy or solid market insight and want to make the most of it. Instead of slowly building profits over time, they use leverage to accelerate their gains. But again, that only works if the trade goes in their favor. If it doesn't, the losses can be just as fast. So in a nutshell, leverage trading in crypto is a tool that can help you magnify your gains by allowing you to trade with more money than you actually have. But it's also a tool that can quickly magnify your losses. It's not something to jump into lightly, and it requires careful planning, disciplined risk management, and a solid understanding of the markets. If you approach it responsibly, leverage trading can be a valuable strategy. But if you dive in without a plan, it can be a fast track to losses. Thanks for watching, and if you have any questions about leverage trading or crypto in general, feel free to leave them in the comments. Don't forget to like and subscribe for more insights, and I'll see you in the next video.